Alrighty, traders, this is Blake Morrow, and you are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. It's been, kind of a slow session for now. And if you're listening in live, you were probably in the chat room. You already know that I'm short some euros. I shorted, as we were closing in on this 50% retracement. We got a little double top intraday. See a double top. A double top should target now, 108. So, if we get down to 108, I might pull it off the table. I haven't really made the decision yet. Looks like, that's around the 38% retracement. We might make it back down to the 50% retracement below 108. It's possible. I kind of want to stay short, or at least have some short exposure out there. And that's, what I'm doing right now. It's been, like I said, it's been a painfully slow session. Fortunately, the euro started picking up a little bit of downside momentum over the course of the last couple hours, which has been good because, just watching paint dry has been pretty tough to do. Now, as you can see, the Aussie continues to be really strong. We are challenging that real big long-term 618 retracement, 78% retracement. We're slightly above, and we're above that resistance. So this is one of the reasons why personally I would keep some euro exposure, because if the dollar, you think about the euro as the dollar, right? If the dollar starts gaining some strength, it's going to bleed over to the Aussie. And if it bleeds over to the Aussie, it's just going to feed into the euro weakness. So if the euro is breaking lower, it's down towards 108, and then the Aussie starts showing a false breakout, right? Like this. And I don't have any short Aussie US dollar exposure. I'll talk about my Aussie exposure here in a second. But if we have a failed breakout over here and we start heading down in the Aussie, that's going to just fuel the fire of the euro dollar. That's going to fuel the fire of the euro dollar weakness, in my opinion. Okay, so that's why it's like, okay, even if we have a double top here, and let's say we complete it, let's say we get down to 108 or 107.95 or something like that, I kind of want to keep some exposure, because if the Aussie shows a false breakout, then we have this dollar strength that comes through, not only against the euro but across the board, right? So that's my thoughts on the euro and the Aussie as well. Now, speaking of Aussie exposure, I am short a little bit of Aussie New Zealand. I think myself and a few of us in the chat room, in the ForexAnalytix chat room, if you guys don't know us, and we're all chatting around in here. Remember, you can find that chat room right here, next to your icon. Okay. Excuse my dogs, by the way. The pool guys here comes every Monday at this, always at the time that I'm trying to do a webinar, of course. The chat room is located right there. Anyway, if you're in the chat room, you're probably already, short some Aussie New Zealand, or you're thinking about being shorted. And let me tell you the reason why I am. We held the 200-day moving average. We hit a new high in the Aussie New Zealand. I was waiting for this. You can see it right here. I was waiting for this previous support to act as current resistance, and also the 78% retracement of this entire move down. And also the 127% extension of this last move. That confluence, it all comes in just sub 107. So I wanted to start selling some. I actually am short about a half size. I will add to it, but I would have to see some sort of daily reversal sign. That could come today, but we'd have to see this. Let me draw this for you. We'd have to see, we'd have to see this candle turn red, right? And give us like a red body. So so that would be a wick. Damn it. That doesn't look all that good. Let me see if I can make this a little bit better. Okay. So we have like a red body, right? A red body. And it leaves us a long wick and gives us some false breakout up here. Then I would actually add there's still a lot of time left in today, but the way that things are going and as bid as the Aussie is, I'm not expecting it, right? So if I saw a reversal candle like that, then I would be stepping on the gas and just adding the shorts. But that would obviously be closer to 106, and I'm just not seeing it. And so if I got that, I would be adding. But right now, I've got a little bit of exposure, about 15 pips lower. And hopefully we at least get a little poke up here and reversal and close back below this, what is that, 106 like 40. Then I'll feel a little bit more comfortable about being on the short side. I am a little nervous about it, but one of the other things about the Aussie New Zealand, it's divergent, relative strength wise. So that doesn't mean it's going to stay divergent. It just is right now. So anyway, that's what I'm thinking with Aussie New Zealand. Anything else? You're probably wondering, wow, US dollar, Japanese yen, we bounced off 107 again. Yeah, yields are up right now alongside stocks. So you got equities that are higher. You got the stock market moving higher. You got yields moving higher. Did I just say equities and stock market, which was the same thing? Yes, I did. So that's supporting us at 107. I'm not long the dollar yen, but you have to be very careful about being short dollar yen while we're trading too close to 107. I actually think that we're going to eventually break 107. Not right at this moment because equities are strong, but if equities roll over, I think this is that's happening. So what do you do with the dollar yen right now? Well, maybe you sell it up at 108 if you can, or maybe the 200-day moving average if it gets up there over the next 24 hours. That might be a better trade. That's something that I would consider. Okay. Last thing I need to talk about is the S&P. I mean, we're threatening an upside breakout and a squeeze, and the stock market is extremely strong. I'm not happy about it because I did take some losses being short risk, but it is what it is, right? The stock market is extremely well bid, and I think it is a product of everybody's trying to chase the market higher because they have to be involved. And the thing is we squeeze above 2,900, we're probably going to the 200-day moving average, at 3,000. And we might even squeeze past that too, as everybody's short, we'll be like, oh crap, I've got to cover. We might actually even be able to get over that a little bit. So just be careful being short risk. That would be being short the Aussie, being short the Kiwi, or unless you're playing the Aussie New Zealand, being long yen, in this environment, unless we, give us some sort of technical failure up here, you just have to be a little careful. All right. Remember, guys, you have 2 days left to sign up for the Trader Summit. We will not be broadcasting this webinar on Wednesday and Thursday, and the reason why is because the Trader Summit will be going. We have one license for the for Zoom, even though it's the big license. We can't run multiples. So we will not be doing the Trader Summit. I'll let you guys know if we make an adjustment to that, but I'd rather you guys be listening to all of these awesome speakers. So if you haven't signed up, make sure you do so. And guys, I want to thank you all for hanging out with me today. Let's hope for some volatility over the next couple of days. Have a great one, and I will see you tomorrow morning on the Face webinar. See you guys.